Sam is a global industry agnostic entrepreneur and investor. He has a long track record of turning around troubled companies and assets, leading industry consolidations, and bringing companies to the public markets. He has stewarded dozens of companies across industries, including energy, logistics, manufacturing, communications, healthcare, and real estate. He's the founding father of the modern REIT industry and created three of the largest real estate investment trusts. One of them, Equity Office, sold for $39 billion in 2007 in the largest leveraged buyout of the time. Sam has also been a pioneer in investing in emerging markets. He has applied his commitment to strong governance to institutionalize companies in Latin America and introduced the first Brazilian mall company and the first Mexican home builder, respectively, to the New York Stock Exchange. Sam chairs 5 companies on the New York Stock Exchange, including Equity Lifestyle Properties, Equity Residential, Equity Commonwealth, Covanta Holding Corporation, and Annixter International. He's an active philanthropist with a passion for entrepreneurship. In 2017, he was also named by Forbes as one of the 100 greatest living minds. So with that being said, Sam will be interviewed today by Rick Jones. Rick is a partner at the global law firm Deckard. He's the co-leader of the global finance and real estate practice groups. He's advising clients on all aspects of real estate law with a focus on structured finance and mortgage finance transactions. He's also recognized as one of the leading voices in commercial real estate finance industry for his role in many innovative deal structures and leadership in changing the structured finance industry. He also regularly contributes to the, and is the chief editor, I should also say, by Deckard's blog, Crunched Credit. So without further ado, I would like to welcome both Sam and Rick. It's a pleasure to see you both today. Thank you again for joining us. We very much look forward to the discussion today. So, Rick, on to you.
Thank you very much. It's a tough act to follow to be introduced after Sam, but I appreciate the kind words. And Sam, nice to have you with us for this conversation at a very challenging time in our country and our economy. There's lots to talk about here, and please feel free to answer questions that are better than the ones I asked if you have really good questions to answer. But let's start off with, at the very macro level, what's your take on the economy right now? Where are we? Are we in a V? Is it a bathtub? What's going on out there?
Well, number one, I don't know. And the best I can answer you is say, what I think I see. I'd like to think that a V kind of recovery is possible. I doubt that that's, in the cards. I think that the most likely thing is going to be something that looks more like a U. I hope it doesn't turn into an L. But I think that this is a major dislocation. You almost, could, ask the theoretical question of whether the cure is worse than the disease. The lockdown of a country and obviously to whatever extent you do that, just creates just unforeseeable problems and extraordinary efforts at, returning. Everybody talks about, will this, store open, or will this restaurant, come back? Nobody talks about startup costs. There's a huge number that's going to be needed in order to, in effect, subsidize businesses in one form or another to go from opening to being, efficiently profitable. And I think, so I think this is a very difficult time. It obviously is going to have, significant implications on the real estate industry because, what we're talking about is tenant demand, and certainly I think we're going to see a further decrease.
Yeah, thanks. I think that seems fair. I mean, no one's got a crystal ball, but we all have. I always tell my folks here that to not have a view is to actually have a view and just not understand it. You know, everyone needs a view to try to grow their business through this pandemic. You know, I know we don't know, but I mean, do you if this pandemic begins to fade here in the fall, is this something that'll be old news and people will forget about, or is this going to change how the country functions for the next many years?
I don't think that anybody who's gone through this will forget it. And just like, you know, I'm a child of the 50s and I grew up and I heard from people about the Depression, and people finally stopped talking about the Depression in the late 60s. I think people are going to be talking about the pandemic and what it was like to see, you know, to walk down Fifth Avenue in New York and see no people and see no cars, and what it was like to, you know, have airline traffic go from, you know, down 90%. So I think people will always, you know, refer to it, talk about it, probably make people more cautious. Because in effect, you know, if you've made a list of all the things that could have happened in 2020, none of us in January would have, or in December would have put this on the list or even thought that something like this could possibly happen. On the other hand, I think that a lot of the savants and maybe, you know, conventional wisdom seems to think that, you know, this will cause some, you know, major change. And I don't think so. I mean, you know, the answer is it'll speed up some change. I mean, you know, I think as of January 1, 13% of retail sales were online. And I think the projection was that by 2026, it's going to be 30%. Well, I think the events of the last 3 months is probably going to significantly accelerate that program. And maybe we'll go from 13 to 30 in, you know, 5 years or 3 years. I don't know. But that's not a change in what we're doing. That's just an acceleration of what we're talking about. Everybody's focused on, you know, well, we've succeeded in working from home, and therefore, you know, the future of office space is in jeopardy, and we're going to end up with a workforce that works at home. Well, I beg to differ, but I don't even begin to think that that makes any sense. Number one, I don't know anybody who's managed to motivate by modem. And so it's one thing to take a group of people who've worked together and make them remote for 3 months, knowing that they all know each other, they all trust each other, and they've all been, you know, supervised in one form or another. And to do that, and that's a lot different than try and, quote, run a business and move forward. I don't think that we're going to see a dramatic change in the office space situation, with the exception that I don't think we're likely to see a repeat of the WeWork or the, you know, the what I call heavily community focused office space. I mean, I think the idea of sitting 6 inches away from, you know, somebody else is just not likely to reoccur at any time in the future. So I think that that end of the business, which was marginal and marginal to begin with, I think is likely to suffer. Now, having said that, that means that, you know, the largest tenant in New York, San Francisco, and London, along with all of its, copycats, are not going to be a major factor in the office space business. Therefore, along with a lot of new building, it's going to create oversupply. And so, you know, I mean, sure, I think that's what's going to happen. I think certainly the movement, from where we are right now to where we're going at a faster speed in terms of e-tail is going to have a big negative impact and further negative impact on retail. But retail's been going, I mean, if you didn't know it was a fallen knife, you've been asleep for a long time.
Yeah, I've heard about retail failing for the past 30 years. So well,
it has been. It really has been. It's just, done it slower and faster depending on what the stimulus is.
Exactly. Sam, what do you think about all the talking heads the OECD and everyone else projecting sort of global economic GDP for the year? Do you have any faith in our talking heads who are trying to project what GDP is going to look like at a macro level across the globe?
Well, I think you asked me two questions. One was, do I have any faith in those guys? And my answer is not much, as best evidenced by the unemployment report of last Friday. Every single economist missed the numbers. And on the other hand, I think that, the United States is actually going to do, relatively speaking, well in the next 24 months. Maybe minus. But well compared to the rest of the world. I think the emerging markets are really suffering, and I think it's going to take an enormous amount of money and a lot of time to bail them out. I think the rest of the world I think is going to slowly move back and become productive. But no one should think that this whole pandemic thing is a short-term thing. And we had it, we got through it, and now everything is going to be fine.
Well, I remember writing a very, very sunny piece of commentary back in January, and the world looked awfully good as long as there were no black swans, and we certainly have found one. When do crystal ball aside, when do you think we're going to see another month like January 2020? Is it 2 years out? Is it 3 years out?
Well,
is it ever?
Yeah. Oh, yeah. I think it's ever. I mean, I'm not a pessimist, and I think but I think it's going to take a while to recover from where we're at. I think the best metaphor I could use is you had a very successful restaurant, and you went from 100 to 0 overnight. Now you're opening up. You still got a good reputation. But it's going to be slow, and people are going to be cautious, and you're going to start with limited capacity. Well, I think we're going to start with a lot of excess capacity, but that's the same as limited capacity. And I think it's going to be a relatively slow, but I think positive direction recovery.
Great. Okay. And what do you think about our friends at the Fed? We had the equivalent of the Mr. Draghi statement from our chairman yesterday. Do you think the Fed's doing the right thing right now?
I think the Fed is probably doing the right thing. I think that I think more than anything else, they're focused on not missing the boat, so to speak, and not doing what happened here in the 30s, and when the Fed just wasn't really focused on exactly what was going on. I think they've been sensitive so far. I think they've acted appropriately, and frankly, even a little more aggressive than I would have expected. But I think the circumstances required it.
Okay, well, one last question on the economy before we move to real estate, where you and I basically have our day job. When you look at all the money being poured into the economy, I've been scratching my head wondering where the inflation has been. Do you think we're now going to see inflation after this exercise in both fiscal and monetary stimulus?
I don't know. I mean, I grew up looking at your white hair, give or take the same time you did, and and we all went to school. We all learned that if you oversupply capital, you create inflation. I've been surprised that we've been able to, avoid inflationary response. I wouldn't be surprised if we saw some, but ultimately, inflation more than anything else is going to be a function of demand. And I guess my question to anybody today would be, how quickly can we expect demand to return? How quickly will people, be confident enough to repeat January of 2020?
Yeah, I remember my first 14% house mortgage, which was very painful. And it's been nice not to see it, but it is a little troubling. And it affects our business, which is, tied to fixed assets. So let's move to the real estate economy. And you've already said a few things about office and retail, but as the pandemic abates, what's the commercial real estate world look like here in 22, 23?
I think it's going to be slow. I think that, generally speaking, there has been a repricing of commercial real estate without everybody involved agreeing to it happening. And so I think right now we have a significant disparity between what somebody thinks their properties are worth and what they are worth. Obviously, a perfect example is that if you look at the public market tends to continue to be a good harbinger of what's really going on. And in the public markets today, there's been a 25% give or take reduction in the value of the REIT business generally, certainly in the major asset classes. And I wouldn't doubt that that's not a real reflection of the change in values.
Okay. Interesting. And you mentioned the office economy, where you're obviously been a major player for so many years. And I've heard two arguments about the pandemic. Well, we're never going to go back to the office, so we'll need less office space. On the other hand, we are not going to sit 6 inches apart, so maybe we need more office space. Do you have a sense of how those two conflicting dynamics might play out?
Sure. I basically believe that them that say we're never going to go back to the office are wrong. And at the same time, I don't see people increasing their overhead to create more space per employee. And so I think maybe the answer will be, less employees, more automation as part of the answer to, in effect, running a normal office. But I think we've seen the top of real estate's percentage of operating expenses. And I think we're going to see, to the extent we see anything from this, it will be a reduction in the number of employees, but not the expansion of space.
Okay. And as you point out on retail, we've sort of had 10 years of change in 10 weeks. When the old Warren Buffett line, when the tide goes out, you see who's wearing bathing suits.
Sure.
And it looks like it's going to be a very different world. I saw just today the announcement of the breakup of that giant mall deal. Is this a further indication that the mall is dead or dying?
Well, let's not confuse the word mall with retail sales, because that's really, the retail sales are not dying. They're just moving from one place to another. And I think that the acceleration of that is going to continue to make retail real estate, less relevant, and therefore the malls less relevant. I think the corner grocery store and the corner drugstore, etc., are still going to be a function of what I call convenience. And convenience retail, I think, is kind of unaffected, although all retail is affected. But I think we built a lot of malls, from give or take 1950 to, to a few years ago, and we overbuilt by a lot, and it's going to take a while before everything gets back in balance.
Gotcha. That makes perfectly sense. How about the sort of future of the cities issue? That's also been banging around as a question. Are we going to de-urbanize? And is there going to be a movement out after the millennials all moved into the center city for the excitement of verve of the city? Are they heading for the burbs?
Boy, I don't think so. Again, it's a bunch of savants who have nothing to do. And so they come up with thesis, that they can, then pontificate about. 9/11 happened. Everybody said, "Oh my God, it's the end of major cities, and everybody's going to move out." And if anything, the movement continued. Here in Chicago, we've seen any number of companies move their headquarters from the suburbs to the city, from boondocks to the city, because the cities are unification, urbanization is part of our socialization process, and I don't see the pandemics changing it. There'll be some people who will move to the suburbs, de-densify, but I think that they will be just an asterisk, and I don't in any way, shape, or form envision the depreciation of the 24/7 city.
Great. That makes me feel better about when all my favorite restaurants in New York City will still be there when I finally get back.
I think they will be.
That's good to know. Hey, how about on that same topic? I have a lot of friends and clients in the single family rental area, the so-called SFR space, who are pretty excited that they think that everything that's happening might actually turbocharge their business as people move out and they don't want to invest all their capital in a house, and therefore the rental of a freestanding house is a good thing. What's your take on that industry?
Well, I think that the industry, first of all, everybody talks about this industry as though it just got discovered 8 years ago. Individual investors have been buying and renting houses since the beginning of time. And effectively, it's only become a discussion point today because the industry has created a couple of big public players, and a lot of other institutions have decided that that was an asset class. But the bottom line, I think, is that it's always been a good business. I think it will continue to be a good business. I do not think that the pandemic is going to change the numbers of that business very much at all, if at all. Again, I think it's people with not enough to do trying to come up with something to say. I just don't see that as having any significant impact on the business. I think the business is fine. I think it will continue to be fine. I doubt that the pandemic will in any way, shape, or form dramatically change the numbers or the environment.
Okay, interesting. So you sit atop two of the largest real estate businesses in the planet, and as opposed to those people who bloviate without capital, your opinions are backed by capital. So how are your real estate companies doing?
The answer is thank you for asking. EQR, ELS, and EQC are all doing fine. All three of them have had a kind of real focus on liquidity. And so, EQC has no debt. EQR and ELS are at all-time lows in debt. We weren't necessarily expecting a pandemic or anything like that, but we were very aware of the fact that we were in, uncertain times, and uncertain times required high levels of liquidity. By virtue of that, we've done fine. Rent collections in April, May, and June have been right on the money in all three arenas, and so I think that the companies are doing fine. EQC, which has a big pile of cash, may in fact it spent the last 5 years liquidating 150 properties. So we've got $3.4 billion of cash. And I think maybe over the next 12 months, we're going to get to start investing that money. I specifically mentioned 12 months because literally nothing's going on right now. The entire commercial real estate market is kind of frozen. And so I think we got a lot of guys who may be in trouble and quote unquote don't know it, and and banks and similar lending institutions. So I think we're going to need, probably till September or October before people start looking in the mirror and saying, well, what do I do and how do I solve problems? And hopefully we'll get a chance to use that capital at that time.
We're going to come back to that too. And a lot of people are going to be watching you. You do have a certain reputation for succeeding in chaotic markets. So
yes,
you're a tell on where we might be going. Before we go back, I want to go back to that, talk about where you're going to spend all that money and when. But let's think a little bit about this cycle and compare it to. I get a lot of questions about, is this like 2008, 2009? It's in my world. An awful lot of managing directors who are pretty senior never actually saw real estate decrease in value, and that they're kind of you read about it, but experience is vastly different. So, how is this different than the so-called Great Recession 1.0?
Yeah, I think the biggest difference is that the volatility is greater. I mean, you end up, there was, despite that, as difficult as 07, 08, 09 was, nobody had revenues down 90%, but that's what's happened to the hotel business. So how are they going to come back? Are all the hotels going to open? Are we going to have a supply and demand situation in that space that gets very attractive? I think the one thing I'd say as many times as asked is that nobody ever succeeds by quote unquote buying markets. They succeed by buying individual deals. And so I don't know where the best opportunities are going to be, but a lot of it is going to have to do with the ownership structure and how strong the ownership is. And that's going to have a lot of impact on where the opportunities are.
Yeah, we certainly learned in the last time through, it may be a location. It's actually about management competence and management competence and management competence.
Yeah.
What do you think about the, I know we're talking about individual assets, but is the warehouse and industrial space as close to a safe haven as we have right now? Is that different and affected differently?
I don't think so. As a matter of fact, I've been, telling my own people that, to be careful, that they for sure are the flavor of the month, and everybody is quote unquote owning industrial and distribution space, and people that don't think are remembering how quickly this space can be added to the supply. I mean, it takes 2.5, 3 years to build an office building. It takes 6 months to build 1 million square feet of distribution. So I actually think that it's maybe getting a little ahead of itself. And I would be surprised if that particular part of the business didn't suffer accordingly.
Yeah, it's interesting because that's the one place where you hear people say, well, I know it's the building by building, asset by asset, but here's an area where you can put your money to work on an asset category. And it always seems like it gets a bad answer.
Conventional wisdom needs a whole bunch of people to opine about it, and that's what they do.
God bless them all. We need them out there. Happy idiots. They help us all. What about in this marketplace? We've talked about the real estate business. How about let's think about the real estate finance business and liquidity out there. All my banker friends are happy to at least say, well, at least this time it's not my fault. this is not a liquidity-driven event. I'm not, even Donald Trump doesn't call it the CMBS virus.
Right.
And so everyone feels a little better about themselves. But let's look at the different asset categories. Let's start with CMBS. What do you think the future of commercial real estate, capital markets financing is as we come out of this recession?
Well, I think that CMBS has had some what I would call Darwinian impacts. They found that an awful lot of the retail ended up in the CMBS market. Disproportionate amounts, and frankly, just the opposite on multifamily. They ended up more with the insurance companies, et cetera. So I think that a little more skepticism is likely to erode, emerge from this period. But I don't really expect what I would call the basic pieces to change much. I think we'll, as in every market, we'll go up and we'll go down, and we'll be optimistic and we'll be pessimistic. But I think that this isn't like 2008, 2009, where we had a whole bunch of structures that were inherently bad. I don't think we have that situation today.
Okay, well, your lips to God's ear.
Yeah, the other thing I'd add is that I think liquidity is, first of all, I think liquidity is value. So I've been a big fan of liquidity all my life. At the same time, I would tell you that I'm not sure that, that I would, in effect, break my hand patting myself on the back about all the liquidity that's in the market. Because I think that in this kind of an environment, that kind of liquidity could disappear overnight. I mean, look what's happened in the oil spike, in the oil patch. We've gone from, just in unending amounts of liquidity, and then all of a sudden, there's none. And yet there's none today, and yet we're sitting here talking about, all this liquidity.
Right. It's there till it's not.
That's right. That's exactly right.
Yeah. What about, I know this is not a space you and I probably play in as much, but I do worry a little bit about the sort of sub-regional banks, the health of the banking system. If retail doesn't come back, if hospitality is an ongoing disaster, if there's a slower GNP growth, are the small banks, which are provide a lot of credit, particularly in non edge states like New York and California, are they healthy? Or are they at risk because of all this?
Well, I think that they may be at risk, but I don't think the banking system, at least in my career, has ever been as well capitalized as it is today. So the answer is some of those banks may be in trouble, but I think the number of players out there ready to scoop them up is far greater than what the opportunities are going to be.
Yeah.
I mean, I don't even know whether anybody has given enough thought to the degree to which we have recapitalized our banking system over the last 10 years. And it's been just extraordinary. And at least at the moment, their levels of cushion are very significant. And we may have some regional banks or local guys that get in trouble, but I'm not. I don't think there's any systemic risk there at all.
Yeah, as opposed to our European friends, where I sometimes think I have a higher personal net worth than some of these big European banks. So
well, but the answer is the United States, to its credit, has been focused on disclosure. That's just the opposite of what the European banks have done, and consequently, they get subject to surprises because they do things differently than we do.
Yeah. Just to cover the other the other banking or financing categories, do you think the GSEs are going to be recapitalized as private enterprises in the next couple of years, or is that continue to be a pipe dream?
Well, that's like asking me who's going to win the election in November. Okay, if the Trump and the Republicans continue in power, it seems to be that they're focus is getting the GSEs recapitalized and away from government ownership. If the Democrats win, I think that's very unlikely. I think the GSEs have acted very well in the last 10 years. They've stopped, pushing things and over lending, and I think that they've been a good supporter. And if it were up to me, I would encourage them being spun off as regular companies, and in effect figuring out a payment program to the United States government for guarantees.
Yeah, they've certainly done a great job so far, and are a critical part of supporting the commercial real estate space, the multifamily space. Last category of lenders out there are the so-called alternate lenders, the non-bank lenders. And some of them have gotten into trouble recently through their reliance on repo liquidity, the stuff that's there until it's not. What do you think about that space? Is that going to stay a robust part of capital formation for real estate here in the next decade?
Yeah, I guess my answer to you is that at the moment, or in the last few years, we have had a significant number of people playing in that space. Hedge funds, various pools of capital. I worry about whether or not there is enough real estate skill set to handle that diverse group of people, and I'm skeptical as to whether or not that's more speculation than it is providing a service to the industry. And I don't know the answer as to whether they're going to survive, but to the best of my ability, I try and stay as far away from them as possible.
I think your point is well taken, that it's hard to get enough scale in that space to really be effective, and I think that industry is suffering from lack of scale. So maybe an M&A opportunity out there coming over the next year or so. So
I wouldn't be surprised.
Yeah, that may actually depend on what happens in the election. Well, let's go. Let me touch on something which you mentioned earlier, and I think everyone would love to hear about. You are sitting on an awful lot of cash, and after a 10-year longest expansion in history, we're looking at significant disruption. Are you buying yet, or is that opportunity out there sometime in the near future, or is that a 2021 exercise?
If I were a betting man, I'd bet that it's more of a 2020, late 2020, early 2021 exercise. I don't think there are any transactions going on right now. I just met with the largest commercial real estate broker in the country in a session, and his business is down 80%, 90%, and it's just a question of there's nobody home. And I just said earlier in this program, I think it's going to take a while for all of the players to figure out what this thing means to them. And I think everybody's likely to defer making any decisions until they have a better understanding of what the impact is going to be.
Gotcha. Well, we may find out that the rental stream, which has held up across all asset categories way better than I thought it was going to in this first 3 months of the pandemic, if that rent stream starts to get interrupted, people's options might begin to narrow, right?
Exactly. I mean, it's one example. We just don't know what the real impact of this is, and when we do, then transactions will get created because people will bet one way or the other on the impact.
Exactly. It's funny, my European friends are behind us because they typically see quarterly payments. So they haven't made some of these payments here. So it defers the period of time when you can play rope-a-dope. But writing a check every month reduces your rope-a-dope capacity, I think, considerably.
Considerably.
Yeah. Are there tells out there? I mean, are the things you watch, you're data driven. Do you look at certain data sets to say, this is going to tell me when the situation is crystallized in a new way, creating either opportunities or further risks or whatever? I won't tell anybody.
Just to use the example you just used, we're very, very sensitive to how rents are being paid. We've offered covent adjustments, if people had a specific problem. The fact that we've had so few requests is indicative of the fact that, at least at the moment, I don't think our rent is being paid with a lot of pain. I think that, at least so far for us, I think we haven't seen any unemployment impact on our tenant base. And so being at the upper end of the multifamily space, or being in the mobile home space, which is a different space completely, we really haven't been very effective as long as we've been in the upper tier of the space.
Yeah, I've heard a lot of multifamily product people say they're seeing rent paid by credit card, which is maybe a tell that people are running out of resource. That wouldn't be in the upper end, but in the middle of the multifamily space.
Well, I'm not as I'm continue to be an enthusiast of A quality multifamily, and I'm not an enthusiast of C quality multifamily. As you go down the quality scale, the impact of COVID and the unemployment becomes very real, and could create a lot of different circumstances for different people.
Yeah. Do you buy that huge print we had on employment numbers last month? Is that a blip, or is that going to flatten out and not go up further, or do you really think we'll see employment grow robustly over the rest of the summer?
I think employment is going to grow appreciably. I think that I would expect unemployment to be below 10% by the end of the year.
Yes, that would be a very good thing for all of us.
Yes.
So I'm surprised you haven't been. I would have thought people would be lined up out your door looking for rescue capital. It's been relatively quiet so far.
Yes, sir. Very quiet, and I think it's a fun, as I said, if people don't know what the impact is going to be, or if they've got overly optimistic perspectives, if I could just hold out another month, or hold out another 6 weeks, or hold out another 3 months. I think that's where the mental set is today. And I think, everybody is afraid of overreacting. And I guess I'm just sitting here saying that I don't think you're overreacting. I think you have a real crisis, and it's going to be expensive.
Yeah. You're not paranoid if someone really is following you, right?
Yeah.
And I know that hospitality is a strange place, but I mean, I'm expecting to see that to be the first place where rescue capital has to step in. People who make a long-term bet on the restoration of that business. I mean, how big a bet is this notion that hospitality will come back in the next 6 to 9 months? Is that a wild bet, or is that a decent bet?
Yeah. I think that hospitality is going to come back slower than other forms of real estate, without exception. I think that there's a certain degree of mental set out there that says, geez, we've been without traveling for 3 months. You just make the sales call on Zoom. And that's going to be just fine until your competitor gets on a plane and shows up across the desk from the guy and makes the deal. So I think that the inclination, and I mean, there really is a reason why we have hotels, and there really is a reason why we have business travel. I think it's likely, just like the airlines, I think the airlines are going to come back slower than they'd like to. I think they'll come back slower than the positive impacts on the virus.
Yeah, it's interesting. I sit about a mile away from the Sanctuary Hotel on Kiowa Island, and they reopened this week, and it is absolutely full now. 5 days later, it's really quite astonishing, and it was an interesting data point that I had not expected to see. And so you're really telling me I'm going to have to go visit my clients. I'm going to have to actually go through Penn Station again. That's horrifying.
I'm afraid so. I'm afraid so, because you can't afford to risk one of your competitors going to Penn Station.
That's a frightening thought. So I promised to bring you back to the, for good or ill, to the election. We'll talk about that a little bit, not from a political point of view, but just as its impact on our business. I remember writing a paper back in at the time of the last election with all my proposals for dealing with the Hillary presidency, and I had to rip it up afterwards. I'm hoping I still have a draft, because maybe that's all relevant to the Biden presidency. How do you think that the binariness of the election is going to affect our business writ large, and how about your business?
I think that every business is going to get affected by the election, whichever way the election goes. I'd like to think that we are a middle decision country, but I think we've allowed ourselves to get to both extremes, and that, in my opinion, very helpful. And the most important question for the future of our country is how quickly can we get a middle of the road policy that in effect is supported by the majority of the people.
Yeah, I mean, a lot has happened by executive order over the past 4 years, and if you live by executive order, you die by executive order.
I think you could say that about the 8 years before it as well.
That's also indeed true, and we've seen it go both directions. But
both, that's a perfect example of what we're talking about. Is neither one of us think that living by executive order is a good idea.
Right, exactly.
And I don't think either of the last two presidents who have relied upon executive orders are doing themselves or the country a favor by not forcing consensus.
Yeah. So when you talk to your team with this election coming up, and it almost seems like it's not even there. We're so far out of what normal political spectrum is like. We're having an election. Okay, interesting. What are you telling your team about? Is there contingency planning if we're into a world with much higher regulatory pressure, more robust environmental reviews? Does it affect you guys when you think about your 5-year plan?
No, I really think that we have to be agile. We have to be flexible. I'm not an enthusiast of 5-year plans. I'd much rather adjust to the circumstances. And whichever way the election goes, I'm sure we'll adjust accordingly.
Okay. Well, it's the only thing certain is it will be different one way or the other, I suspect. So thank you for that. Before we're done and we're getting close to the end here, we mentioned earlier the U.S. might be the nicest house on a bad street, but what do you think of when you look at non-domestic marketplaces? Are there opportunities out there that are unique or highly attractive? or places where you wouldn't want to be?
Yeah, I've spent the last 20 years investing in the emerging markets, and I think that the current environment is the least certain, and I think that says a lot about my attitude. I think that we're looking at debasement of currencies. We're looking at commodity risks. We're looking at a lot of things in the emerging markets, and there are a lot of things happening, and the emerging markets are an extreme responder to changing events. So I think I'm a much more cautious emerging market investor today than I ever have been.
Okay. Do you think the Europeans are going to be able to get their act together and continue to support the southern border of Europe with German and Dutch and dollars, or is that experiment under real risk at this point?
I'm afraid to answer the question because my gut reaction is that it's hard to depend on political systems to do things that are maybe not in their best interests. Meaning that it's hard to imagine that large subsidies are going to be willing to be spent toward those objectives, and I have a difficult time believing that those objectives are achievable without those kinds of commitments.
Yeah, it's not really the United States of Europe, is it? It's
no, not even close. And despite the discussions recently between France and Germany, there's a long way to go before there's a united anything.
Yeah, I agree with that. Yeah.
And a lot can happen in between.
Yes, and notwithstanding, at one point I said, well, Brexit might matter only if there's something to leave, and I sometimes wonder how long the European community can hold its act together. They're the greatest can kickers on the planet, but you wonder.
Yep.
And in terms of non-U.S. markets, the elephant in the room is obviously China, which we're in China, and I'm sure you have investments there. What do you think about that opportunity? It's gotten a little more daunting, hasn't it, recently with the political disruption?
Well, we were in China early in the early part of this this century, and had some very successful experiences in the real estate business there. And then a very strange thing happened. Our partners stopped speaking Chinese. Stopped speaking English. And there was a big tell, and what the tell was is that our capital was no longer worth the premium, and the moment your capital is no longer worth a premium, that's a space you don't want to play in.
Yeah. Yep. That's a tell that it's time to leave. We have a couple minutes left. I think, if I remember correctly, there might be questions from the audience. I'm not sure if the electronic gods who are controlling this will convey that to us, and we can certainly answer questions if we have them. But I'll ask you one more about politics. I'm curious. I've been a little concerned that all this feed me to talk to the Treasury and the government from the real estate sector is sort of inappropriate, let's say, and probably not productive. I mean, I see a letter get lobbed in by one trade organization or the other every single week saying, "Me too, give me more goodies." How do you feel about this somewhat unseemly desire to take taxpayers' money to fix your business?
I think it's a little bit like the savings and loan industry. It's taking on long-term assets with short-term liabilities. That's really how I feel. I think that, as I said earlier, what the Fed has done, I think is terrific. And I think to Mr. Mnuchin's credit, I think the focus on using forgivable loans to maintain employment, I guess, is just a brilliant decision, and it's been well executed. Having said that, I think that government bailouts should be limited to, extreme crisis situations, and I'm uncomfortable about the fact that too many industries have viewed the government handout as a handout and just can't wait to get in the next line.
Yeah, I'm afraid I may have to pay for it all someday, which troubles me. But,
Well, maybe not you and I, but our children.
our children is deed, which is a great question to end up with. Is how do you feel, Sam? How do you wake up every morning? Are you enthusiastic about life in America and life in the commercial real estate space, or you got a pit in your tummy over what's going on out there?
I have a pit in my tummy for what's going on in the American society. I think the fact that we have lost the art of compromise, lost the art of patriotism, lost the art of achieving common objectives is what bothers me. Real estate industry is going to be fine, but it's going to be fine only if we have a country that works together.
Well, I hope you are right, and I hope that that we find the middle to continue to support the growth of this wonderful country. And you've been a great patriot and a supporter of business. You've done a fantastic job all your career. So I'm looking forward to the next 20 years watching you invest and make
my pleasure.
great country.
Thank you.
So